Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. In these videos, we talk about the news that affects the market, then we put it in perspective using our Elliott Wave charts. In this video, we'll be featuring the stock symbols that you see on your screen now. And remember, you can fast forward right to one of your symbols by using the chapters feature on the video. Now, let's take a look at the charts. At the time of this recording, it is late on Friday evening, so the futures market is closed. If you like these videos, please hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. Thanks, we really appreciate it. Taking a look at the chart of the markets, you can see we had a big down day on Friday. We were talking in our short videos throughout the week that we had the ADP jobs report on Wednesday, where we had more private sector jobs added than expected, but then on Thursday, more initial jobless claims filed, first-time unemployment filers. So how does that balance out? Everything was pointed toward the non-farm payrolls report on Friday, and it obviously disappointed the market, basically showing that there was, in general terms, a 5% increase. So that means there's more wage inflation, and so that gives the Federal Reserve fodder, at least that's how the market took it, to continue to raise rates. In fact, there had been 125 basis points of further rate hikes priced in on the Fed Fund futures, and after that jobs report that came out today, now it's up to 150 basis points, so an extra 25 basis point rate hike priced in now, and that was just more than the market could handle on an above average down day. So we'd also talked during the shorts during the week that we'd bounced up, and the question was this just an oversold bounce up to the resistance level at 380, or were we actually creating the wave 4? Now we're going to be questioning, can the 360 level hold? So resistance held at 380, now we're down at support at 360. Does that hold, or do we move lower from there? Are we in some sort of range bound? I don't really think so. And if the Federal Reserve starts talking hawkish, I think you can see some follow through here. When we had on the 10-day moving average, we went from slightly overbought to slightly oversold in just a couple trading days. So some pretty significant volatility that came into the mix today as well. We'll look at the VIX in just a second, but I did want to show that if we do break this wave 3 low, question about this wave 5, that acts as a target for a wave 3 as well. And then once that's hit, then you bounce and you have a wave 4, which means new low. So if the wave 3 extends down to this 5 target, then we'll have a wave 4 at some point and new wave 5 lows down the road. Right now, if we can hold here at 360, still bounce back and create the wave 4, perhaps bounce back to the 50-day moving average. That's right where the target range would be for a 4. But remember, this does not mean the wave 4 is underway. It's saying if we have a wave 4, that's where it would likely wind up. So now all eyes are on 360 next week. Can we hold that, or do we move lower from there? Let's take a look at a chart of the VIX real quick, and we can see that playing ping pong back and forth with the 30 level throughout the week, and then we finished above 30 in today. But again, for as ugly a day as it was in the market, not really that significant of a move higher in the VIX. What is it going to take? Last night in our insiders meeting, which is for our subscribers only, alert subscribers only at EWOtrader.com, the question came up, what if Putin hits that button? What if he hits that button and launches nukes in the war with Ukraine? Could that send the market down significantly? And I said, absolutely. That would do it. That would give that big spike down with a big spike in the VIX. And I don't think anybody's putting it past the possibility of that happening, although it is a bit of a black swan event and nobody wants that to happen, and we hope that that never does happen. But is it a possibility? I think it is. Towards the end of the week, interest rates went back to the upside. We talked about this in TradeFinder, and we do TradeFinder every Tuesday night. If you haven't signed up for it, you can do so under this video or go to our website at EWOtrader.com. So every Tuesday night at 9 p.m. Eastern Time, we talk the markets, we look for trade ideas, and we have a live Q&A. It's a lot of fun. Sign up if you haven't and join us. It's a great group. And so we talked about the fact that with rates coming down, that's not necessarily such a good thing, although the market used it, the dollar coming down and rates coming down, in order to get that little bit of a bounce. But be careful, because with prices going up and yields going down, that likely means that money is moving into the bond market, which will eventually be reflected in the equities market. And I think you saw some of that today. So for rates to have dropped like that in this area where the Federal Reserve is raising rates so significantly, I think you saw a lot of money coming in from the bond market or into the bond market. Another interesting fact that I wanted to bring up about these two rally days that we had midweek on the S&P, both days the S&P had over 97% of the stocks to the upside, so it was a really broad-based rally. The last time we had back-to-back days where over 97% of the stocks in the S&P 500 were up was back in 2015, and following a brief rally, the market did roll over and make new lows. Just an interesting tidbit to add into the mix here. So now if we take a look at the dollar back to the upside again, so both interest rates moving up, the dollar moving up, not liking the non-farm payrolls report, additional 25 basis point on the Fed fund futures. You can see why the market finished to the downside today. Some stocks of interest. Tesla had one of its worst weeks ever after a rare miss on their earnings, and now we're down here into this area. We talked about this in both TradeFinder and the insiders meeting on the importance. We talked about Tesla a lot. A lot of people are interested in it, obviously, that if we couldn't hold 240, we'd likely go to 220 quick. Well, that happened today. Didn't necessarily mean one day, but that happened today. And then we're probably going to come down to these lows down here around 200. That seems to be in the cards now, and Elon's back with the Twitter deal again, etc. I don't think Tesla shareholders are all that happy about that. But my question for you is, do you think Tesla breaks 200? Because if it does break 200, it's Katie bar the door, look out below. We really need to hold into this area. So do you think it breaks out, or do you think we hold 200 and we bounce back and we're going to run back up eventually up to 300? If we put the 10-day moving average on, you can see that we are a bit oversold right now on Tesla. So a little bit of a bounce is warranted to correct the oversold condition from the 10-day moving average. But after that, who knows? Another stock of interest is FSLY. You can see here that we had a wave 4, but it only went to 30%. So when looking at that, Elliott would say that was more of a correction within a major impulse move rather than a wave 4. But it does label that way because it is in the algorithm. And sometimes Elliott had a few guidelines that went along with his algorithm if you really in-depth read his writings. So the key here is, can we hold the 8 level, or do we break that and head down to around 6.5? The fact that we broke below 10, I think, is telling. And you can see there that we came back and we tested it after breaking it, tried to break above it there in the middle of September, couldn't hold it, no follow-through day, and then broke back down, made a new low in the wave 3, back to test 10 again. Think the next move is down to that wave 5 targets. I think it's likely we see 6.5 or so, at least 7, if not lower, on FSLY. Looking at Square, you can see that little bit of a bounce here, back above 60. Did not quite label a wave 4 here, so we're still in the wave 3 to the downside. So this gives you the same scenario as what we have on the S&P. If we don't bounce and create that wave 4 soon, and the wave 3 target ends up being down here where the 5 projection is, then that means we bounce from there and then make another new low from that point on. Taking a look at the 10-day moving average here on Square block, you can see that we did gap down and finish near the lows, and we're right down near support here at those wave 5 lows. We tried to hold there and bounce and didn't make it too far before rolling over with the market today. Looking at some of our other markets on the diamonds, chart's going to look similar. We talked about this last night, as a matter of fact, in the insiders meeting, that we didn't want to have a gap down this morning, because if we had a gap down, that means then we have a potential island reversal right here. That's when you have a gap in one direction and a gap in the other direction. In this case, these 3 bars are left to kind of flow down on an island. And when you have this kind of a pattern, an island reversal, if you will, that means that the direction of the second move, the second gap, usually holds for a while. In other words, it would lead you to believe that we're likely headed lower from here and that we will break that 290 low. At least that's what a general island reversal sets up. Looking at the Qs, it's kind of the same type of scenario here, not as clean of an island because this is awful close to closing that gap right there, but nonetheless, we had a gap up and then a gap down. Same type of scenario. So as you can see, things aren't looking too bullish for the market right now. The best thing we have going for it is in just this one day of selling, we're a little bit oversold, and with all these gaps, you know how I feel about gaps. There's possibility that we bounce back up and fill those gaps before going further down, or they could be breakaway gaps, especially with these island patterns, and then head lower from there. The Russell, after a brief trip back above 170, now we're back below 170 again. So we consolidated underneath it the last time, and we were able to jump back up. Couldn't do it, couldn't hold it, and then we talked about this last night as well. It's interesting that these charts are all kind of coming to fruition, because we had that gravestone doji there, which was a foreteller of a bearish day ahead, and that's exactly what happened. Taking a look at Bitcoin, cue Led Zeppelin, because the song remains the same. Nothing's changing here. 20,000, just back and forth. Talk about playing ping pong I did on the VIX. So this 20,000 level it's almost becoming comical on Bitcoin. Can't get much above it, can't go much below it. It's just we're glued to 20,000, and until we have a meaningful break there, it's almost not even worth looking at, because it's the same story every single day. Looking at some of the international markets, for India, we talked about this both in the TradeFinder and the Insiders meeting, that we needed to hold this 41 level. We had said before that with this vertical move up, if we couldn't hold 43, we'd go vertically down and then need to hold 41. And we kind of broke back above it and then back below it today with the U.S. market. And very highly likelihood now that we're going to disqualify this 5-wave impulse pattern. It's barely hanging on there to 75% correction on the wave 4. So we're likely going to move lower from here. And so I think we're probably going to come down and test these lows down around 39 on the INDA. So what was once really holding up on the international charts is falling like the rest of the market has. And Germany, taking a look at Germany, the only question now is, could it be, is it possible that we break below this low here on this wave 5 and relabel to a wave 3 again? That would be the 5th time that happened. I've never seen it happen 4 times before like it has on the EWG. That would be unbelievable if it did it again, but the possibility exists with the fact that it looks like we're breaking down to move lower. Looking at the 10-day moving average on the EWG, we're just not that oversold, and so it leads you to believe that there are lower lows to come. Thought we'd take a look at oil. Kind of interested on your comments on oil. Where do you think oil is going to go? Thought it would bounce back to the upside here on the news of the OPEC oil cut. OPEC ministers are not happy about the fact that prices come down. There's leakings coming out that they're starting to see the end game here, realizing that there is a limitation. There is a point where there's no more oil to come out of the ground, and I think they're in the we got to make our money now type of a scenario because prices are elevated from where they've been, but they're angry that they've come down, and they're determined, hell-bent to get them back to the upside. So we've had this nice rally, and now we're at 75, and we're a little bit overbought right now from the 10-day moving average. So right now we're a little bit overbought here. But my question for you is, where do you think oil goes? Does oil break above 75 and take off and go retest the highs? Can they ignite that kind of a move? Or something I think we need to consider is if we are put into a recession, which I think becomes highly likely that it's not just this mild recession people are talking about, it's a significant recession, and demand really falls off, is that enough to get oil to roll over, and then we come down and maybe make new lows or at least test those lows? So I guess my question for you, I'd like for you to post your comments underneath the video. Do you think oil breaks from 75 here? Let's give it a day or two to rest from overbought scenario, but do we go back and test the highs or go back and test the lows? Well, let's make it simple like that. But curious is what do you think on the price of oil? Taking a look at GLD, looking at the metals, nice move up, and then the question is where we are right now. Can we get above 160? We did hit that wave 5 target right in the tap box. I mean, this is an amazing piece of software, Profit Source. If you want to learn more about it, go to hubb.com. I think it's the best LA Wave software on the market. But bouncing back to the upside here to 160, and the question becomes, is that the final wave 5? Are we done there? We've done what we needed to do to hit that target. Are we on the process, because it was just a 58, so call it the 61.8% fib level on the low there, in the process of bouncing back to the previous 4, which by Elliott wave rules that's what should happen? Or is this just a zigzag bounce and then we could be going lower? But it is nice to see at least this sort of a bid in the metals. We haven't seen that in a very long time. And look where that 100% extension is. If it is just a zigzag in a complex 5-wave to the downside, the 100% extension is all the way down around 145. So let me take this back off, and the key is if we can get above 160, which we got turned back today, but if we can get above 160, then I think we see 168 in a very short period of time, and we come up and we test that previous wave 4. But 160 holds the key for GLD. Hope you have a great weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.